If you've ever tried investing in IPOs in the US or European market, it's probably left a sour taste in your mouth because it doesn't tend to go well. You usually get a quick boost followed by trading under the IPO price for the next year or so before it recovers. And that's if it even recovers. But in some markets, IPOs can be very successful investments, such as the Saudi market. Let's find out why. So I'm going to start the video by saying that nothing in this video is financial advice and it's for entertainment purposes only. So in the US market, you have very popular IPO stocks such as Rivian, Instacart, Coinbase, Deliveroo in the European market, UK market. And a lot of these tend to jump up like 30-40% on the first day and then trade below IPO after a week or something, if not even from the first day. And academic studies show that US IPOs underperform the market over 3 years after listing. But then you have the Saudi market, where you have stocks like ACWA Power, which jumps 30% on the first day, and now 4 years, 3 years later, they're trading 6 times, 5 times, 7 times what they IPO'd. So one big thing that differentiates the Saudi stock market from the American or European stock market is that the Saudi stock market actually has a limit on how much volatility or how much intraday movement can happen to any given stock. So I believe it used to be 15%, the maximum that a stock can move up or down in one day, and now it's been reduced to 10%. But there's a special case for the first 3 days of an IPO. So the IPO and the next couple of days after that, they allow up to 30% up or down movement. And therefore, not everyone can always get a piece of the pie at an IPO. So people have to sort of register to be there in the IPO first, and they get guaranteed a number of shares. And usually IPOs are oversubscribed, such as Solutions by STC, which was 130 times oversubscribed. Which leads me on to another point. STC is a semi-private sort of company. It's, I think, technically private, but government-backed sort of thing. The retail investors in Saudi Arabia tend to have a lot of trust in these companies because of the high regulation and in some cases government backing. And this is why everyone flocks to the IPOs. And apart from that, they can also see how well previous IPOs have performed. So all this oversubscribing basically makes the stock just max out its limit of how much it can go up or down. It'll just max out the 30% up, 30% up, 30% up, and then 10, 10, 10. Even after all this, everyone who wants to buy some of it might not have gotten it yet. A lot of them might be government backed, or they might even be subsidiaries of really big companies like Aramco, for example. So the IPOs in the stock market are almost like when limited Yeezys are being released and everyone is just there trying to get some. Now there are some IPOs that might have not performed this well or might have performed badly even. So it's not a guaranteed profit or something. But a lot of the IPOs do perform really well. So if you do good research, you can get very lucky. And then once you're through that IPO phase, because there's these limits 10% intraday movement or whatever, that stock is basically almost never gonna just collapse on you, because the worst thing that could happen in one day is that it goes down 10%. So you have enough time to get out if you need to. While US IPOs just can go up or down as much as you want, and there's more room for manipulation and day traders and options traders and whatever to come and do their thing. So personally, I would much rather invest in a Saudi IPO than in an American IPO. But of course, you should do your own due diligence and your own research. And let me know in the comments if you have any experience with any IPOs or with Saudi IPOs or Saudi stocks. And if you want me to make any other videos, let me know in the comments below. And don't forget to like and share and subscribe. And I'll see you in the next video.